Hi, Peter Eliades with you. Stock market cycles update. This is Wednesday, December 4th. Just a little bulletin here in terms of what's going to be going on in the next several days. We told you the other day about the passing of one of our favorite relatives, our first cousin. So we're going back east for a funeral early tomorrow morning. That's Thursday, and we'll be gone until Sunday. So we might do an update at some point over the weekend, but don't count on it. Probably will not be another update until we're coming back Sunday rather late, and so we'll be here Monday. There will almost certainly be an update at the latest by Monday. So that's where we stand in terms of our scheduling. In the meantime, I hope we have continued to excite you with this software that gives projections for the market, that did a real good job in calling a top. This top right here, closing price high, occurred last week, of course, Thursday of last week, and we did an update on Friday mid-morning that showed you where we were in terms of that particular projection, where some very long-term nominal 40-week projections were finally being met on a closing basis. That was on the S&P. This, of course, is a Dow chart. What we want to show you here is the market's at a tricky position right now, very short-term, because this is a Dow projection that is pretty clear. This is a 12.1 to 13.8 day offset, 2.5 week offset, gives a nominal 5-week projection, and there's a pretty clear projection here that's calling for a closing move on the Dow down to between 27,219 and 27,389, let's say, rounded off. And that projection, despite today's rally, remains very much in effect. As you see, in order to invalidate that projection on the Dow, you would have to get all the way up to this level around 27,780 or thereabouts, which of course is about 130 points higher than we are now. Should the Dow close more than 130 points up over the next day or two, let's say the next day as a matter of fact, because even the day after that would require a close way up here to invalidate projection. So really, this, if you were just looking, if we were just working with the Dow charts, this would be the projection that we'd be looking for. It's very much in effect. But here's where it gets tricky. If we put in the S&P 500 index with the same offsets, take a look at what happens there. We gave a preliminary projection at the low. That was not today's action, the day before. So this is Wednesday. This would have been Tuesday. And we just missed confirming that projection. We showed you this chart yesterday. And now what's happened is a preliminary projection has been given down to around this area on a closing basis. But in order to confirm it, you need to break below this second line. Now, the interesting thing is, because a preliminary projection has been given, in order to invalidate that, you need to go back above the red line. You go back above the red line, and you indeed have another projection that would be based on this low right in here, this low close. So that's why I say the market's a little tricky here, very short term. We still think that a high of some significance may very well have been reached last Thursday. But until we get rid of all the little tricky ins and outs here, we don't have high confidence in terms of where the next move is going to be. Let's take a quick look at what we consider to be the best projection generator, the New York Composite Index. That in itself has its own little projection too, because it had confirmed 10-week downside projections when it closed below both the lines, not today, but yesterday, Tuesday. And look what happened. Projections way down here were confirmed. Now, in order to invalidate the projection down here, the New York Composite Index has to get back above the red line. In other words, it needs to move above both of the offset lines in order to invalidate this downside projection. So that's where we stand on the projections, the nominal 5-week projections. I thought those would be the best ones to show you the short term because there are some contradictions there. We don't have anything clear cut. We continue to believe for many, many reasons, the reasons we gave you last Friday, that this could be some kind of market top, perhaps even a more important one than a lot of people realize at the time. There are some things that argue for that and some things that argue against it. The daily advanced decline line of the New York Stock Exchange argues somewhat against it because it was making a high coincident with this high, and it would be very unusual to see an important high registered with a coincident high in the New York Stock Exchange Index. So, what else do we want to look at? We want to look at our line in the sand, that fabulous line on the New York Composite Index. Remember this one, this trend line? We got above it last week, and even then, I think we showed you the line and said, we've moved above it in terms of getting back to it, and if you start moving back in time, where the line became support rather than resistance, you can see above it here, it got below it, got below it, got below it. Let's move back a little further because there are some good examples of, although the line is very important, support and resistance, there were times when it was penetrated, even when it became support, by a significant amount. Notice what happened here back in October of 2011. Way below a low that was a low close on what date was this? This was the date of October 3rd of 2011, closed well below the line that had been acting as support through that, but immediately moved above it, came back to it one more time, and then stayed above it for a long period of time. So the line has just been an incredible demarcation line for bull and bearish moves. And right now it's saying that you're still on the lower side of the line, and this line rules as resistance in terms of upside moves. And what makes it even more important is this red line represents, if you go back here, January of 2018, that all-time high close. So this is kind of a line in the sand for us. I wouldn't be surprised if we don't fall apart here. We hang up maybe into the end of the year, because originally we had thought that the New York Composite Index would come up in this area where the two lines meet right near the end of the year, the red line being the prior all-time high and the trend line being the one we've showed you for some period of time. Anyway, that's where we stand. Ins and outs, ups and downs, contradictions in terms of some of the very short-term projections. Our feeling right now, as we said, is that we could have seen some kind of important market high, but we need more evidence of that. We need to start seeing confirmed downside projections. Perhaps by early next week, we'll begin to see that. Okay. That's it for me, at least for a day or two. As I said, we may do an update over the weekend, depending on what our schedule is. There's a chance we won't, though. Better chance we do an update by Monday of next week, and certainly by Tuesday of next week, we will be doing another update. That's it again. Thanks a lot for watching. Please make some comments below. Give us a thumbs up if you see fit. And subscribe if you haven't subscribed yet. Bottom lower right of the screen, click on the little channel bar, the little red box there, and subscribe to our channel. And when you do that, click on the bell, and that'll let you know. You'll know immediately once one of our projections or one of our videos goes on. You'll be immediately notified via email. Thanks a lot for watching. Have a great weekend.